I'm Daryl Jones, Director of Research at Hedgeye today, and we're here with a macro minute with a focus on oil. Oil, obviously one of the more hotly contested global macro asset classes and really asset prices in the year to date, and really for the last year. A lot of people missed it on the way down and have really missed the rally in the last month. In the last month, WTI is up about 10%, Brent's up about 26%. Today, both Brent and WTI are giving some back, both down about 2.5%. The key challenge for the bears on oil has been rig count in the U.S. Rig count in the U.S. Down about 280 rigs in the last 2 months, and really basically at a 4-year low in terms of rig count. So the idea for the bears is, or the thesis is, the less drilling rigs that are drilling, the lower production will be in the future. And that is on the margin a positive data point for the price of oil, but we think there's still a lot of overriding bearish factors for price. Three key things that we would highlight. Number one is just U.S. production in the U.S. Despite declining rig count, production in the U.S. As of the most recent weekly data, up about 14% year over year. It's still growing, literally at a 40-year high. Second key thing is storage in the U.S. and storage broadly in the OECD. Storage in the U.S. again, literally at an all-time high, pretty much an 80-year high. And the key issue in the U.S. is that Cushing, which is the major hub, will likely be completely full by the April-May timeframe, so that's going to be a major issue for oil producers. And then the third key thing just to highlight is demand. Demand from both OPEC and the IEA has been cut consistently throughout the last year, and we think demand estimates are only going to be cut further. The big issues are really global growth. Chinese growth is slowing sequentially. European growth is effectively flat. Japanese growth is negative, and we think the U.S. is set to slow sequentially as well. So really demand's going to disappoint on the downside too. So we really think the bearish tide will turn on oil again, despite the 10% or so rally in the last month or so.